Max Money Tribe, Max Money Family, what's going on? It's your boy Alvin, and we are back, baby. We're getting ready for the year 2022. First things first, I appreciate you guys. I thank you. If you're new to the channel, smash that subscribe button for me. Crush the thumbs up, please, with a pretty please on top. Currently sitting at $4,700. We are adding a few more funds to get ready for the year 2022. And we're looking to go up to about 20K. We're calling it a $20,000 challenge, family. So today's video, I want to talk about the Crocs acquisition of Hey Dude. I think it's major news. There was a big sell-off, so there's great buying opportunities. I loaded a few shares just to play it on the safe side, right? I'm going to talk about that acquisition. I also want to drop some dividend stocks on you to help get the foundation to your portfolio built up, or maybe you can just add one of them, right, family? So let's get into the dividend stocks first. We'll jump on down here. I should have a dividends list. We always do the short squeeze list, as you see here. But here's the dividends. First one on the list is AMCR. AMCR is very reasonable, $11.66, has a 52-week high of $12.92. So if we zoom out for the year, pretty much stays in this range. Now, what we're looking at is that dividend yield, 4.052. That is nice. That is a very, very decent dividend payout for such a low stock. Now, this stock, like I said, tends to stay in this range if we go out for the month, for the week. But for the year, you have a 52-week low. Where's that low at? 52-week low is $10.33, while the 52-week high is $12.92. So that is a tight window right there. So you don't have to stress too much over this stock, AMCR, right, family? Putting that on your radar. The next one that I really, really, really like, Realty Income, ticker symbol O. We go out for the year. This is up $10.32, 17%. Now, the dividend on this is also 4.073. Perfect. That's a great dividend. 52-week high is 72.43 on this stock, and the 52-week low is 55.34. O Realty is just a great stock to add to your portfolio, whether you have 10 of them, 5 of them. It's a great banger to add to your stock. Great dividend. Another one I'm sure you heard of, Coca-Cola. They have one of the not smaller, but a smaller dividend compared to those other two that I'm talking about at 2.886, and the stock is $58. So if you're just holding for the dividend, you might want to go for larger ones, but you also want to go for safer ones. So if we zoom out for the year on Coca-Cola, it's up about 10%, $5 on the year, and there's nothing to really stress about, right, family? So the 52-week high, the window, 58.92. The 52-week low, 48.11. So right now we're sitting at the high. We're on the higher end of that. So you might want to use that information and play it accordingly. The last one I have on the list before I get into the Crocs acquisition of Hey Dude is Morgan Stanley. Now the dividend on this is also on the lower side, 2.049. 52-week high is $105.95. But the 52-week low is $66.84. So that's a bigger window if you're going to be holding your money in this, and it's on the higher side right now, right, family? We're looking at the dividends from them. Those four, Morgan Stanley, Coca-Cola, O Realty Income, Amcor. I like all four of those. Now, family, I want to talk about Crocs. Yes, the Crocs that you see everybody wearing, crazy colors. I got 20 shares, $2,486, down about 60 cents. But let's check it out. As of Thursday, this was down $16.25. If we go out for the year, it's still up almost 100% on the year, and it's up $59, even selling off like it did. And that sell-off was major. But look, right here, just looking at this crappy chart, you can tell it went down here to test that level of support. I love loading up at that level of support. Now we're looking at highs up here. Let's check out the 52-week high. $183.88. 52-week low is $58.97. So we are sitting in a great position with Crocs. Why did it sink? Right here. CEO of Crocs defends the $2.5 billion Hey Dude acquisition as shares tumble. Now, some investors are not seeing the appeal of Crocs' multi-billion dollar deal to buy the casual shoemaker Hey Dude. I actually like Hey Dudes. I like Crocs. But right here on Thursday morning, the retailer announced plans to acquire the privately held footwear label Hey Dude for $2.5 billion in cash in a stock deal. The transaction is expected to close in the first quarter of next year. So this is coming up in the first quarter, January, February. Immediately add to revenue and growth, the company said. But Crocs shares tumbled 12% on Thursday. It's the worst showing since April 2020. So you're literally getting the virus dip, that 2020 dip. You literally get to buy it with a stock that knew what it was doing by acquiring it. It looked over its numbers and said it should acquire it. They have skilled experts of why they should get this company, and it allows them to expand and prepare for any volatility in the market with just the Crocs. They now have a bigger brand. So we think it in a great way to diversify and provide a little bit more security to our investors is to not diversify away from the iconic clog within Crocs, but to add another brand which has its own icon. And that is so true. Hey Dude really holds its own. We think Hey Dude has far more potential, both here in the US, also globally, he added. So they know what they're doing. Then it breaks it down. Revenue, $570 million in revenue this year, Crocs said that Hey Dude had. Sales are forecasted to be between $700 million and $750 million in 2022. Banger. In a research note, Piper Sandler called Hey Dude one of the fastest rising brands it has been tracking as part of its biannual Taking Stock with Teens survey. It ranked number 8 in its fall survey, up from number 17 in 2020, sorry. So they know what they're doing. Crocs has loaded up another brand, and I like the move. I don't know if you like it or not, family. Let me know down in the comments. Do you own Crocs? If you own Crocs, safe bet to say, one person that's buying it, you might want to own some of the stock, and it's one of its lowest dips since 2020. And as you see here, it's climbing so fast. So they're talking about this. They're talking about it's one of its biggest dips since that dip. It's not as low as it was 2020, but it's that big dip here. And I can't even believe it was $10 and I didn't own it back then, guys. Now you're talking about $124, and we still have a huge upside. We were at $183 with just Crocs. We add Hey Dude. I'm seeing this thing over $200, family. Let me know what you're going to do. Will you be getting any of those dividend stocks? Do you have a dividend stock that you like? Is it Apple? Apple's a banger. They have dividends. Let me know down below in the comments. Morgan Stanley, O'Reilly. Let me know, family. I appreciate y'all that smash the subscribe button. Crush the thumbs up. 2022 is going to be our year. Break out of those chains of living paycheck to paycheck. Build our mental around financial stuff, for whether it's credit cards, rental properties. We want to keep rocking towards the future. I appreciate y'all. I love y'all. Thank you.